Hi, folks, and welcome to today's webinar. We're going to get started now with capitalizing on Brexit and asymmetric trading. So, big news this week. Very special webinar we have going on today. For those of you who have been in my webinars before, I typically cover topics like top trades of the week, the weekly wrap up, which we cover. Among other items. But this is quite a unique situation we're facing this week as traders. Some of you might have already been involved in trading Brexit to this point in time, and we're going to get into a little bit of what I mean by that. What is Brexit? For those of you who are maybe relatively new to the term, basically what we're discussing here and what has been in the news in general has been the potential for the UK to exit the Eurozone and the implications that will have for the British economy, for the other economies throughout Europe, as well as financially, what it will mean for us as traders. This is without a doubt, what tends to be just mainstream news, even if it's economically related for different countries. To us as traders, the light bulb that goes off in our heads is, can I make money off of this? And if I can, how do I go about doing it? And this is one of the more prime opportunities that we've seen so far in 2016. Of course, we have a whole bunch of other things going on right now in the markets that we're going to be able to continue to trade off of beyond this week. So the Brexit is definitely not the end all be all of our trading accounts, and but at the same time, it does present an opportunity that we cannot overlook. We've already been speaking to traders for over a week now on a day-to-day basis about Brexit and what it means and how traders have done so far actually in trying to take positions in the British pound specifically. And that is really, I think, where the conversation starts is, we have the date here. It's coming up, just for those of you who aren't aware, on June 23rd, Thursday, as the day when Brexit will actually, or the potential for a Brexit will actually occur, when the UK will go out and tally the votes as to whether they are going to remain or leave. Okay, and if you've been following the news cycle for really a couple weeks now, you've probably seen different polls that have come out as to what percentage of people in the UK are looking to move with the leave unit and which ones are remaining. And so, really, if you've watched pound dollar or British pound Japanese yen during the release of these polls, pretty much those currency pairs are already and have been responding to those different polls. And we're going to actually take a quick look at some polls today that actually showed the voting narrowing, so actually coming a bit closer, and what the market has done recently as a reaction to these different polls. So as we see it, there really is potential to profit on these trades, not just this coming Thursday, of course, where we're very likely, like with any news event, right? This is a news event that's coming one time, so a lot of the news events, if you've been in a Trading the News webinar, we talk about news events that come around many times every 30 days or with some type of predictable frequency. In this case, this is a one-off massive event. The volatility that you're going to see on Thursday is likely to be higher than any volatility you see around even news events like non-farm payrolls. Okay, and that's attractive. It's very enticing for the obvious reasons. The possibility to take home a high number of pips, higher than you ever have taken home on any other trade, really stands out. And I think obviously the attendance in today's webinar is a reflection of that possibility. So for us as traders, really what it comes down to, like any trade, right? There's the reward and risk conversation that you need to account for. There's greater reward attached to this Brexit release for sure. Some economists and big time hedge funds in the markets are saying we could very likely see over a 1,000 pip move in the British pound Japanese dollar as well as the British pound Japanese yen. So if we isolate those two currency pairs for starters, I'm going to bring up the charts here in a second. That's probably where we want to focus our attention. Now, British pound Japanese yen, as a pair tends to be more volatile than British pound US dollar, and that's likely to be the case this coming Thursday. So I think for many of our clients, the how we want to view this is what can I do between now and Thursday to make money on this event, and how should I best position myself on the day of the release to to basically, like we say here, capitalize as best as you possibly can while mitigating your risk. Okay, and the term asymmetric trading, I thought that that was worth actually including in the title of the webinar, because there's different trades, and I think this is reason why people are naturally attracted to news events. So, for example, we have clients who have been trading in the markets for not a very long time, but for some reason they naturally find their way to the platform, around big news events, right? Why does that happen? Well, I think there's intuition there that news events present what the markets generally call an asymmetric trading opportunity, which basically means an opportunity to take home a profit on a trade that's greatly exceeds what you would typically take home on any other given trade during normal market conditions. And some of you might have read, it was big news actually, for those of you who follow, traders who are famous or have some type of legacy attached to them. So, in this case, George Soros has, come back into the currency markets specifically, as a result of this Brexit. And you might have read that recently in the financial press. George Soros is famous for different things over the years, but he really stuck his flag primarily in the currency markets. And it's interesting that he's coming back now. And if you read his comments as to why, it's because of this asymmetric trading opportunity, where yes, of course, there's risk. There's always risk. No matter what trade we get in, we're taking on risk. We know that. That's okay. But when there's this opportunity of outsized returns, greatly outsized returns, it's almost too good to walk. It's almost too good of an opportunity to pass up. Okay, so let's go to the charts, and then we're going to talk a little bit about British pound US dollar and British pound Japanese yen. Now, you don't want to, with these trades, it's almost like an extended version of trading the news, really, what we're talking about here. And if you've ever been in one of my trading the news events around either non-farm payrolls or some other big event, what I like to talk about there is not overthinking it and not overcomplicating what's occurring here, because the markets don't typically wait around for us to think or us to overprocess what's happening. The nice thing about trading news events like non-farm payrolls is, if we see typically certain behavior patterns or price patterns that prepare us for the next time around. So we actually have some type of game plan going into a news event. And if you've been to that webinar that I host, we talk about having a plan in our heads, 15 minutes, 10 minutes, 5 minutes leading up to the release of the announcement, so that we're not caught off guard. We know that the announcement might surprise us, right? We know that there's certain expectations around every news release. So the actual release has the potential to surprise us in some way, shape, or form. But even if it does surprise us, okay, we, in the back of our heads, knew that potential existed, right? We knew that the potential for a surprise, and we still had a game plan, right? So our game plan is multifaceted, and we know that we have a strategy regardless of what the announcement comes out at, what happens. We have a plan. It might not be our ideal scenario, okay? Every time I go into trading a news release, I have some type of expectation is probably too strong a word, because you can never have an expectation with a news event, in my opinion. You can have a setup that you've seen in the past that you hope to happen again, and you have strong belief that it very well could happen again because you've seen it before. That's a trading approach that's based on information you've seen and trading patterns you've seen in the past. Now, Brexit doesn't have that, right? Because it's a one-off. There was no Brexit last month. There was no Brexit last year. There's only Brexit this time, right? So our approach has to kind of factor that in. We have to account for that in some way. And so what I like to do right now is look at some of the price action we've seen. I have a British pound uh, US dollar chart up here. I'm going to just zoom out a little bit to a 4-hour chart. And it's quite interesting. You might have been looking at these charts if you've already been thinking about your trade setup, heading into Thursday, or again, if you've already been placing trades. And we actually have had clients do well over the past week watching the polls. And it's interesting because typically polls aren't something we talk about too much in trading, but here it's very pertinent because it impacts the potential for the British pound to rise or fall. So what we see here is quite interesting. Since June 6th, June 5th thereabouts, where pound was up basically where it is now, we were trading at 146.60. Okay, and then heading down to about June 16th. Okay, so just a few days ago, not that long ago. So over that roughly 10-day period, we saw the dollar really, really rally against the pound, right? We saw the pound drop by over 600 points, nearly, a little over 600 points. So on one mini contract, not even talking about the types of positions that some clients can take depending upon the size of your account, but let's even use a really small example. On one mini contract for British pound US dollars, that's 600 pips that we saw over a 10-day stretch, 600 US dollars on one mini contract. So if you had, it's a multiplier effect based on the size of the position. If you had 2 mini contracts, that's $1,200. 3 mini contracts, that's $1,800, so on and so forth. And so don't get me wrong, I think holding the pound here short for this length of time definitely required a high level of patience over that 10-day stretch, because we were also hitting lows that we hadn't seen in a little while. So just going out to the daily chart here, that move downwards basically took us back to the lows we hadn't seen in a few weeks. So, but why was that happening is really the bigger point. Why did we see the pound collapse here over this 10-day period? Well, there are technical levels that are definitely being broken during this stretch. So you have stop orders on long positions getting hit. That's creating further selling pressure, especially during this little stretch here where we had this really steep collapse. But alongside that, you obviously had polls that were being released that were showing, surprisingly, I think to a lot of people at the time, that the Leave camp, or the people that were voting or being polled, the gap was widening between the people who said they were going to leave the Eurozone, or were in favor of the UK leaving the Eurozone, versus those who were in favor of remaining in the Eurozone. And subsequently, those polls were slowly but surely widening in favor of the Leave camp. And, I think people were a little taken back, at least internationally, right? Because don't forget, people all over the world are trading currencies. This Brexit is related to what the people of the United Kingdom are actually going to do. But at the end of the day, everybody around the world has the capability to trade this news, this information, and everybody will. So I think internationally, there is more of an opinion that England was going to remain in the European Union. If you look at, people are comparing this a little bit to when Scotland had the opportunity to leave the UK, and despite all the polls going back and forth, they actually, remained. So people compare that to this, but people were definitely shorting pound, right, over this stretch of time. So people that had the foresight to see that these polls were going to really decimate the pound if that gap kept widening, profited here. And so I bring that up because for a few reasons. One, we still have a few days to go here or a couple days to go before the actual release. So moves like this are still out there and possible. Just look at the last few days. So that entire move that the pound made down to 140 roughly, it came all the way back. It made back the entire move and then some. And why did that occur? And you can see here, this is a 4-hour chart. There was hardly, between June 16th and now, there was hardly any candles that were downward closing, meaning there was basically one or two 4-hour periods where pound actually closed lower than higher over that June 16th to the present day. That's pretty astounding. Especially and that's why with this particular event you really have to be careful. Also because it's not, somebody could say, well, look, we're in a down, we're really moving away from some of the typical conversations we have when we talk about trading. Around June 16th, somebody could say, before this uptrend, this sharp uptrend occurred, well, we're in a downtrend here for pound dollar. Maybe it looks like a good time to short. That person who was not paying attention to some of the polls that were coming out would have been caught in a short trade just as we were shooting upwards here. So again, it highlights that reward to risk relationship. Now, what's interesting is today, if we're looking at it, we're looking at a 4-hour chart here. We're finally seeing, okay, since June 16th, we're finally seeing a candle here, and it's actually just from the previous 4 hours before this most recent candle, where we had the 4-hour stretch closed lower, and in this case, fairly significantly lower, right? We dropped from 147.20 to where we are roughly now, 146.70 roughly. So it's about 50 pips over the past hour that we've seen the pound collapse. Now, what caused that? Well, if you're following the recent polls that came out today, we basically just saw the gap tighten, okay, between the Remain vote and the Leave vote, with the Leave vote now only 1 percentage point underneath, and we have it here in the news and the traders talk, with the Leave vote only now 1 percentage point. This is based on polls, of course, so it's impossible to verify with certainty, but you can see here other news and events. I really love our news feed on the platform and the traders talk, because you also get feedback and opinions of major players in the market. So JP Morgan, this is a major bank involved in the markets, one of the major liquidity providers in currencies. And look what they're saying. The outcome of the vote about the UK leaving the European Union is too close to call. Okay. They're going to go into the vote without high confidence in predicting the result, as polls point to the referendum being in the balance. Okay. So, some people are saying different things about, at the end of the day, you might have heard talk at the end of the day, people, you can't trust polls at the end of the day. It's more likely when push comes to shove, people are going to vote to stay in, who right now might be saying they are potentially to leave, because basically, it's human nature to rather, remain than take a risk and step outside, or go into the unknown. And in recent days, you've had very high profile people, David Cameron out of the UK, Richard Branson, all making strong comments in favor of remaining, in the hopes that it'll sway people that are undecided, or people that maybe have even, thinking about voting to leave, basically trying to sway them towards not doing so. It remains to be seen how effective that will be. But again, what matters to us as currency traders is today we had a poll that suggested the field is really the polls have really narrowed and tightened. And how I look at this move as a trader, okay, what comes to my mind, and if I 1 hour here, if I go back to a daily chart, okay, a daily chart further shows it, right? Because now I have to remember that I'm trading pound dollar. We have Brexit this week. However, if I look at the other factors, technical and fundamental, to me, it looks like we're starting to approach, we are starting to approach the highs for British pound US dollar for 2016. And to me, this looks slightly overextended. We had 1, 2, 3, 4, 5 days 5 candles here where pound closed higher than where it opened. And this to me looks like an asymmetric trading opportunity. Okay, getting back to the title of this webinar, at least between now and well, I'm at Thursday. In terms of this, Thursday seems very far away actually in terms of this Brexit because we're really living hour to hour here with the pound because we have new polls coming out, the volatility is high. So even though the actual release is Thursday, it feels 2 days feel a lot longer in terms of trading than they normally do right now. And right now, to me, this move was really stretched out because basically we had traders factoring in that the state camp is going to win here, and today's polls just threw a monkey wrench in that right now. It very well might be the case on Thursday. That's what the outcome will be. But today's polls threw a wrench in basically believing that the nail in the coffin has been put because it definitely has not. It's way, way too tight. As JP Morgan, if you need any other independent authority, has come out and said they're not willing to make a call at this juncture, which is interesting because banks like JP Morgan love to make calls. They love to make predictions on all different kinds of things. But here they're not. Which tells you how tight it is. And so to me, the asymmetric trading opportunity that presents itself over the next several hours, not necessarily between now and Thursday altogether, is to short British pound US dollar because we really became overstretched on the upside here with pound over the past few days, making back most of this move. And we are at, however, even if you want to look at it on a daily chart, we are at the top of a range, okay, here with British pound US dollar. So we are at the top of a range, and an asymmetric trading opportunity says there's more room to run down. So if you want to, I guess in layman's terms, to talk about an asymmetric opportunity, we have more room to run down than up, okay, based on where the price action has been previously. If we start running up through 147, okay, we're hitting tougher and tougher resistance because we're starting to reach levels we have not seen in a very long time, and the momentum just might not be there as much. You have some orders that will be possibly triggered and that can fuel a little run higher potentially, but there's greater magnitude to the run down because we've been there before. And that's a lot of times with these big moves that you're trying to catch. Okay, a big question I like to ask myself when I trade these big moves is have we been to these price levels recently, and how recently? It strengthens my feeling about where we could go in the coming hours or days, because as a trader, yes, I'd like to make money over the next week, but I'd also like to make money over the next day or few hours if possible. And to me, the best opportunity that I see right now, based on the polls for Brexit, which we have to account for, and where the price action is right now, okay, the downside really looks ripe for pound dollar. That might change. We have to pay attention to these poll releases and the data. Right now, I think we're trying to collect pips in about 50 pips to 75 pip bunches, okay, for pound dollar and pound yen. I think those are very reasonable profit targets given the volatility we're seeing. Take your 50 pips, take your 60 pips, and call it a trade, and look for the next opportunity. Look for the next move to one of these stretched out areas. Right now, it's interesting because when we scheduled this webinar, we didn't know that this is where the price action was going to be at the time, but it's fortuitous because we're at some really stretched out levels right now, and we just had this poll come out, so I think it's really opportune to see, and if we get another poll, okay, looking forward, and I don't think we'll probably see one until tomorrow, unless there's one that comes out that is not on the calendar. If we get the next poll showing that we're tied or somehow the leave camp runs ahead of the state remain camp, well, then we could be off to the races on the downside. And that is an asymmetric trading opportunity. You can see it here on the daily chart, how much room we have to run. Just as recently as earlier in June, so this month, we got down to 140. So if you look at it as how far away from the current price has this pair been within this same calendar month, The short answer is over 600 points away. Okay, and that is a trade that should open your eyes. We don't. Of course, we need to protect ourselves. So if I go short right now or anytime here in the coming minutes or hours, of course I'm going to put a stop order on the top side. I'm going to limit. I'm going to protect myself, and I'm going to aim to limit my losses if the pair runs up for some reason. But the fact that just earlier in June, not even that, June 8th, basically, uh, this pair was over 600 points away from where it is now. To me, that is a phenomenal opportunity that you really have to absorb the potential here to really grow your account in a short period of time. And to me, I like the way the downside looks right now for all the reasons that I've mentioned so far. Okay, I'm going to look to take my profits. So if you're looking to trade over the next day or two ahead of the actual release, which would be, I think, fantastic because you're taking advantage of opportunities that are not going to come around again anytime soon, at least for this particular pair. I was talking about taking pips in 50, 60 point bunches, lock in your profit. It's a realized profit. You're always welcome to get back into the trade. Okay, if you feel the momentum is still running, if it's running down fast, you take some profits. There's nothing wrong with getting back into the trade, and that's something I try to remind traders not just around this particular period, but all the time, because we're always fearful of taking our profits too early, right? And so there is logic to not taking your profits too early and using a trailing stop, perhaps. A trailing stop, I think, will be effective here. At the same time, this pair does have pullbacks that are a little wider than you see sometimes in other pairs. So, for example, if we shorted right now at 146.63 and we see the pair run down to 146 even, okay, it's about 63 pips in profit. That's a reasonable point to take your profit and say, okay, we're approaching that round dollar figure of 146. It might hit some support. We might see a bounce. I'm okay with that. I know that that can happen. The market doesn't move in a straight line, okay, all the time. So I'll take my profit at 146 even, and if I see a bounce of 20 pips, all the better for me on the short side because now I'm getting short. I took my profit at 146, and now I'm able to get short again at 146.20, a 20-point better price than had I remained in the trade. So that's the logic to taking your profits. It's not, and then re-entering the trade. It's not to say that you could hold on to the trade for 12 hours and things can still work out great for you on a even more extended run. Okay. But with these polls and the release and the different commentators making comments, you could have George Soros coming out or some, high profile. There's really been very high profile people across different industries. I mean, we have actors and actresses making comments about, whether they approve of the Brexit or not. So it's interesting how far-reaching this is. But so I think just a word of caution there about looking to book those profits, take them to the bank. If you want to get back in the same direction, absolutely nothing wrong with that. Many times it will work out in your favor. Just be aware of pullbacks, right? We sometimes as traders, myself included, tend to forget, even when the market's moving sharply or with strong momentum in one direction or the other, there can be a pullback, right? There likely is going to be a pullback. We always have to keep that in the back of our minds. That is the rationale for taking profits at a certain point. Not being, why do people avoid taking profits? Okay, probably for the reason you're thinking right now, is because I don't want to miss out on more profits, right? And that's fair enough. That's fair enough. Nobody wants to miss out on a bigger run than they potentially can achieve. But there's a reason why you're also booking your profits, right? You're anticipating the pullback for good reason. And so to me, my stance is it's better to book the profit. See if we get a pullback. If we get a pullback, don't forget you're getting in at a better price. If you're able to get short again at a better price, so that's always worth keeping in mind. I think that's enough coverage of the pound dollar for the moment. We're gonna jump over to British pound, Japanese yen quickly here because we are about 30 minutes past the hour. Pound yen is another pair that's interesting. you know, it's interesting because we usually see more volatility in pound yen than pound dollar, but at the past little time here, we're seeing actually some consolidation in British pound, Japanese yen. And for those of you who ever have been in a webinar where I talk about consolidation, typically what you see after a stretch of consolidation is what? A big breakout. Okay, and that's high probability trading for you. So we're seeing some strong support here. Really interesting, actually. This is a 15-minute chart. You can see, so it's not going back that far, but it's interesting that it's been bouncing off of this support level, pound yen that is. And so we could see, I think it's very likely, more likely than not, we're going to see a break to the downside here. And it could be a furious run downwards when we see this break. And who knows, it might even happen while we're in this webinar. These are moves that, you don't see all the time. Pound yen is reacting to the Brexit data and the Brexit information in a similar fashion to pound dollar, but I think you're going to see greater volatility, no doubt, on Thursday. So why don't we jump ahead to Thursday? So we've been talking about the lead up till Thursday. So we're talking about today, the next few hours, tomorrow. And quite frankly, I wouldn't be surprised if I had some clients come back and tell me on Friday, I actually made more money off of this event on Tuesday and Wednesday than I did on Thursday. And why would I not be surprised to hear that is because there's more strategy involved today and tomorrow. Okay, there's more you're approaching the trades with more evidence and more confirmation, really is the word I'm looking for, as to why you're getting into the trades. So the pound dollar trade we talked about a few minutes ago, this pound yen trade that we're looking at right now, there's more logic between yesterday and today as to, today and tomorrow as to why we're making the decisions we're making. We're going to see volatility anyway. We don't need to, dive into the super deep end of the pool to make money, which is basically what you would be doing if you basically waited till Thursday to try to capitalize on Brexit. My advice would be, if you have funds in your account or if you're putting funds into your account in the imminent future, I think you'll find the highest probability trades are today and tomorrow. Thursday, of course, there's big money on the table, but there's going to be greater volatility. It's going to be volatility that you haven't seen, that I haven't seen as well in a very, very long time. And so I think, you want to keep yourself out there for that. But let's put it this way. Let's say over the next 2 days, you manage to take home, let's say, and let's be generous here because we've seen the moves. Let's say you take home 500 pips over the next 2 days, okay, which on one mini contract, that's $500 hypothetically. The question is on Thursday when we're going to see, the release and the real, the potentially over 1,000 points. How much of that $500 that you've earned in the previous 2 days are you willing to expose on Thursday? And I think that is from a trader's perspective or risk reward perspective, that would be how I would think about it. Because you really have nice potential over the next 2 days to take home some nice profits. Okay, put them in the bank. Anybody who could say they made 500 pips in 1 week, I think would be a happy trader. But as traders, we always want more, right? And there's nothing wrong with that. That's part of our job as traders, to always look for the next opportunity, gain the highest return, because, no 2 days are going to be the same. No 2 weeks are going to be the same. And I want to take advantage of what's ahead of me. At the same time, we have to remember what we've made and how much we're willing to risk of what we've made. So if we do well over the next 2 days, we make 500 points, maybe we're trading 0.2 lots, which is 20,000 units of currency. Maybe we're risking $2 a point over today and tomorrow because it feels a little bit more high probability than Thursday. It probably is more high probability than Thursday. So we're risking a bit more today and tomorrow per trade, let's say 0.2 lots. And then on Thursday, if you want to get involved, that's fine, but maybe you want to get involved with half of the trade size that you've been using the past 2 days because you don't want to risk too much of that $500 profit that you took home, just using my example. Of course, your numbers might be different than that. But my point is whenever I make a nice profit for whatever reason, whether it's Brexit related or something else, my subsequent trade, the thought that I force myself to think, it's not always the most natural thought, but the thought that I force myself to think is how much of my previous profit am I willing to risk on this trade now? Because that little bit of overconfidence can seep in, that type of thing can happen to all of us as traders. And so I always think of how much of my previous profit am I willing to risk on this trade and keep it that simple. So Thursday, just a suggestion, you can approach it as you see fit. But if you do well today and tomorrow, I might consider scaling down your trading size on Thursday. Okay, even if it's in your direction, okay, you're still taking home a nice profit, and you're hopefully adding to it on Thursday, but you are taking risk. We can see a whipsaw. So on Thursday, any of you have been to my non-farm payrolls webinar or any other big news event webinar, there is the potential for a whipsaw. There can be a big sharp move in one direction and then quickly coming back the other way. You want to just be aware of that, know that potential exists. Another reason to lock, if you're on the right side of that trade on Thursday initially, you might want to close that trade out pretty quickly within 10 minutes because there could be a whipsaw. That's on the back of my mind. We'll see how the polls shake out over the next couple of days. If you had to ask me to take a stance one way or the other, I think it's likely to. My feeling is that it's more likely than not to remain. Okay, so I'll go one step further than J.P. Morgan, I guess. Just kidding. But I think it's in my view, it's more likely than not that they're going to remain. But the market is definitely not convinced of that. It's definitely hangs in the balance, using J.P. Morgan's phrase. And so for us as traders, I like that. I like that it hangs in the balance. That it's not determined yet, because to me it's presenting trading opportunities that I can really make money off of over the next couple of days, and of course on Thursday itself as well. So as we get closer to Thursday, feel free. You know what my opinion is. I already discussed one trade, pretty much today that you can look at, the asymmetric opportunity facing us here, going back to the pound dollar chart on the downside. I really like the way the downside of that looks, especially with the release of today's poll in the past few hours. I really like that we're over 600 points away from where we were just as recently as June 8th. I really, really like the looks of that, but I will be looking at taking profits fairly regularly on the way down if we start to shoot down, because I know there's more polls coming out, and I know that we could see a reversal. So I'm protecting myself, which we all need to always remember to do with the use of stop orders on these trades. So with that, I'm sure we'll speak to many of you further individually between now and Thursday. So probably not the last conversation we'll have with you before Thursday. I'll just pull this back up here. Any of you who are looking to top up your account, the one thing I would say here is you always want to have a healthy balance. You're trading with leverage. People like that, but with the high volatility, you do want to have a buffer. You do want to make sure that if you do have some type of drawdown or move, you want to make sure that your account is well buffered, especially in high volatility periods. If you're trading during normal market conditions, as we say, then the account doesn't necessarily have to have the type of buffer it would during times like this. But this is a unique situation without a doubt. So to help you do that, we are actually offering a special Brexit bonus this week, 50%. So we'll match 50% of any deposit that you make into an account, whether it's an existing account that you already have or a new account. We'll give you 50%, up to a maximum bonus of $500. So basically, up to a $500 bonus we'll give to you. So that hopefully should give you ample buffer, regardless of what positions you take over the next day or two, heading into Thursday. So let us know if you want to take advantage of that. You can email me directly if you'd like to take advantage of that at dan@currencyhouse.com. If you're somebody already corresponding with me, feel free. Otherwise, you're probably working with another associate in our office who you feel free to reach out to directly as well. And then this is just a look at some of the other webinars we have coming up on the agenda. Some of them have been quite popular. Some of them you might have been to in the past. Mobile trading is becoming more popular. We are in the summer months in many places, so people are outside a lot, not cooped up indoors. So you might want to, if you don't already use our mobile app and you want to get more comfortable with it, that's a great webinar to come into. Trading our mobile app, in my opinion, is the best in the market, and I've seen a lot of platforms on a mobile device, so you might want to get that on there sooner than later. X Social, all kinds of things we have coming out. So stay in touch with us. We'll stay in touch with you to keep you up to date on the calendar coming up. And if you want that 50% bonus, just let me know or speak to your associate here at Currency House. Thanks a lot, folks, for coming in today. We really appreciate it. Love speaking to you every time, and we'll talk to you again here soon. Thanks. Take care.